morning, everybody. I'm Shauna Jarrett, solicitor of some 30-odd years experience, and also, like many of you, someone who started up a concept from just an idea and have grown it now into 2 businesses, albeit legal practices. I would like to acknowledge the country on here in the CBD of Sydney, the Eora people of the Gadigal Nation, and very much look forward to working with Indigenous leaders, both I have in the past and going on into the future. As I said, I'm a solicitor of some 30 years experience, and the most important part of starting up any idea is getting your framework right, your legal framework. How are you going to structure yourself so that you can move forward into the future and not get yourself into trouble if your enterprise doesn't work out? You need an appropriate legal framework so you can protect yourself, your assets, possibly your friends and family's assets as well, the IP that you create, your reputation, which is a very important thing in today's world, and all of that is to protect you from what are called, in legal sense, the vicissitudes of life and business. Get that right, and then off you go, off on that wonderful roller coaster of innovative ideas, and enjoy the rewards that come from creating an idea and making it into something tangible and something that can help other people in the world itself, if that's what you're doing. So somewhere, I don't quite remember where, I read that we're in a 4th industrial revolution. It's all sorts of technological change. It's not just the coronavirus, which is, I think, a mere in the way we do things, but there's the e-commerce, there's AI, there's social enterprises as a way of doing business. But unfortunately, not everything has changed. There are some aspects still of doing business or creating business or an entity where ever since 1713, I know, somewhere in Star Trek land, a enterprise was set up, it went spectacularly broke, lots of very important people lost lots of money, and the UK Parliament legislated the Company Act, and we have corporations from there. And then here in Australia, 1901, the Australian states agreed to a Federated Corporations Act, and apart from some changes that took a very long time, it was only in 2001 that every state in Australia agreed to be, where the companies would be regulated by the Federal Corporations Act. And changed since all that time. There have fortunately been some little adjustments made, courtesy of Josh Frydenberg, our Treasurer, which has regard to the laws around insolvency for small businesses, which I'll explain to you a bit later on how it all fits in. So, you ready to go? You've got your idea, you want to take it that next step further. What are the legal entities, what frameworks you can set yourself up in that will enable you to continue to grow, either grow yourself into something like a Facebook, I don't know, or something that you can sell, make your fortune and retire and go and grow organic wines up in Orange, which I have a brother who's done just. So, a lot of options. I can only give you some gentle advice. I could give you those options. You really should go and get specific legal advice with respect to your specific circumstances. Because as you see as I walk through this, there is a bit involved in it and you will need to tailor it according to what you need. This legal advice will sit alongside the accounting advice, the taxation advice, the markets, and the guru advice that you get when you're going through this fabulous journey. I'll also talk about some of the very interesting governance issues that were raised by Murray in his really interesting talk yesterday. So, again, a slide, but I promise you there's only 2 in all of this. Your legal structures for setting up a business are firstly that of the sole trader. So that's you. You're the business. You own the IP. You own the trademark. You own whatever it is you develop. But you are also personally responsible legally for things that can go wrong. So the pros of being a small trader, it's very cheap to set up. Go online, you get yourself an ABN number, you register your business name if you're going to have one, and then you would go and register your IP or your trademark. You have the ability to offset any losses that you might make against the income that you earn somewhere else or the income that your sole business gives you. You can claim the expenses going through in setting up the little bit of business that you do, and any income that you earn comes solely to you. However, the cons, I have to say, outweigh the pros of being a sole trader. You are personally ultimately liable for any issues which are mostly debt issues that your development entity runs into. So you own a car or a house or a motorbike or some shares. If your business gets wound up by a creditor, they're the assets, your assets will be the ones that get sold up to satisfy the debt. If the bank of friends and families have supported you in what you're doing, and I have seen it and I have had to act for sole traders where, their parents went guarantor on a loan over their property, you get made bankrupt, the bank calls in the guarantee, your parents or friends can't repay that loan, then the house gets sold. And that's just a harsh reality of parents and friends supporting you in your business endeavours. If you can't pay your creditors, your bank card debt, any sort of unsecured business loan you've been able to take out, then the creditor, if you can't pay that debt within a certain period of time, can bankrupt you. And this is one area where the law has really not adjusted since, and you probably don't even know who I'm talking about, but Mr. Micawber in Dickens's novel, he went to debtor's prison because he couldn't pay his debts. We don't go to prison anymore, but you could end up on a list, a searchable federal government list that forever shows that you were once bankrupt, which in turn will affect your ability to lend additional money. In a professional capacity, you will have to declare the fact that you were once bankrupt. You can declare yourself bankrupt to avoid your creditors. That lasts for 3 years and 1 day. A creditor can bankrupt you, and that can last between 5 and 8 years, or you can enter into an arrangement with a trustee while your debts are paid out. During that time, your assets are sold up, your friends and family's assets, if they've gone guarantor, are sold up, and you have to advise everybody that you lend money from in the future. You also can't travel overseas without your trustee's permission. So it's a huge handbrake on any future plans. Also, as a sole trader, you've got nothing to give to potential investors. So what do you really need to have? And it's something I've got, and that's a proprietary limited company. Now, people first started trading millennial ago. You had a product, you went out, you started selling it, you went to find bigger markets, further out markets, While you're doing it, you met more people. People want to invest in what you're doing. Family, bankers, venture capitalists. But they want to be protected from misadventure, from fraud, from the vicissitudes of life. A storm sinks the ship, the coronavirus that completely stopped your face-to-face business. And what was then created, as I said, was the South Sea Bubble Company, and out of that, we now have proprietary limited companies. They're actually, I think, the best business model to have. It's its own legal entity, so the company can sue and be sued. You are not the person, you are not the legal entity. You could be a director, you could be a shareholder, you can take on whatever role you want within the company. If the company runs into insolvency, then it's the company's shares, the company's assets that get sold up. If the company wants to expand, bring in venture capital, it sells the shares to investors. And when you've decided you've had enough, or you've got a fabulous company that could be floated on the stock market, or you've just had enough doing all this, you want to go and do something else, you sell the company, and it is an entity in itself. There are advantages if you set up a company. For you personally, you can be employed by the company. Your contractors, the people who are helping you develop your product, can be employed by the company. They get paid a salary, they get paid superannuation, take a paid holiday, pretty important. More importantly, you can take out workers' comp to protect you and your employees from if they get injured at work, they can then get workers' compensation. And you are also going to be held accountable for work health and safety requirements. If you do set up a company, and I've heard this discussion over some of the talks, is what do you do about those shareholders, those venture capitalists coming in? You develop a shareholders agreement, and that is a document which sets out who can become a shareholder, what money they're to pay to become a shareholder, what rights they've got as shareholders, and just as importantly, how they can get out, how they can be brought out, who they can sell their shares to. There's a bit of politics in shareholding, but this structure enables you to have some control over how it starts and how it could possibly finish. If you are a shareholder or one of your shareholders dies because you've got a family company that you've set up, again, a company structure will enable the business to continue even though one of the shareholders, or even you, unfortunately, have died. The company still keeps going. That thing you created can continue to develop. A very important part also about setting up a company, and we'll talk a little bit more about this in the governance part, is that you set the objectives of your company. I don't know how many of you have heard of, it's an American sort of concept where there are entities called B Corps. And in their objectives are ethical, they're balanced. They're about making money, because that's what your shareholders want, that's what you want, but they also have ethical standards. They take into account social factors, environmental factors. The company can only do good for its shareholders and the community within which it works. And we're now starting to see, and it's not a new concept, it's just a way of using these concepts, companies that are also social enterprises. The company makes money, the money is used for a social enterprise. It's able to, and there's taxation issues involved in it, but you are able to use the profit of your company to go into a charity or a social enterprise which helps solve a problem in the community, or the return on investment that you get, that your shareholders get, is for social purposes, not just to own 6,000 Maseratis and be able to fly around the world in a jet. But if that's your thing, you can do it. And we'll come back to that a bit more in the governance section. The downsides of setting up a company, because there are always ups and downs to whatever entity you set up, and these are the things you need to balance when you're thinking about where it is and how it is you're going to grow and how you're going to protect yourself, the people who invest in you, and future users of whatever your product is although some of the downsides are the company is its own legal entity, but its directors are effectively, they're the responsible people for how the company is run. So if the directors allow the company to go into insolvency, in other words, it can't pay its debts as and when they fall due, then the company directors can become personally liable for those debts if they've gone guarantor, or personally as a company director, if it can be shown that you were indifferent, you were negligent, you weren't keeping an eye on what was going on, you allowed the company to trade insolvently, then you as a director are disqualified from being a director from that company or any other company for a period of time. And again, this comes back to reputation, to your future plans. We've seen in Australia, some very spectacular company collapses where directors have been indifferent to what's going on. I don't know how many of you have ever heard of Alan Bond or Christopher Skase, both of whom were gentlemen that made absolute fortunes. And Christopher Skase left the country and we could never find him again. And I can't remember what happened to Mr. Bond. Eventually he did die. Insurance companies have gone broke. Bank directors get their reputations smashed because as directors, they didn't really pay attention to what was going on in the company and where it was all headed. So there are taxation issues around companies, but again, get taxation advice as to how to be effective in the tax payments that you make. As a company, you've all got to comply with the obligations of the Companies Act, and again, we'll talk a bit more about that in the governance section. And various rules and regulations set up by ASIC and other regulators. Australia is some people would say regulated country, other people would say we're actually fortunate in the regulation that we have, in that we are actually able to be protected. We can follow through with people who don't pay their debts or who actually misuse their positions of responsibility. Companies can be more expensive to set up, but these days you can get a constitution online, you pay your registration fee for the company, and then after that, as you get to know what you want to do and how it works, you can keep an eye on the costs of keeping that structure going. Now, as you'd all be aware, we're at the beginning of, in the middle of, near the end of, I'm not too sure, an economic downturn. And one of the issues is the survival of small businesses, small companies, not just from the perspective of the fact that 40% of Australian businesses are small, but also to protect the future, to protect those of you who do want to set up a new business, a new company, and get out there and give the new world a go. So the Treasurer's brought in some insolvency changes. They'll come in effect on the 1st of January next year, which is also the time that the current protections will fall away, and it'll be much easier, unfortunately, to sue companies and individuals who, for all sorts of reasons, owe money to their banks, to their creditors. Currently, there's a upper limit of $20,000 before a company can be wound up, but it'll go back down to $2,000, which is what it used to be. The new rules are similar to the Chapter 11 laws. You've probably seen them in various movies about companies being wound up and then being recreated somewhere else. It's happened to a similar system for Virgin in the current climate. But what it enables to do is small businesses can trade while insolvent. So you've got a period, I think it's 20 days, to work out arrangements with your creditors to come into some sort of payment plan to pay off your debts. They're a little bit complicated. Maybe 20 days isn't enough, but what it will do is if you can recognise that you can't pay your debts, you or your company, you've got 20 days to be realistic, sit down and sort out how to get out the other end. And that may mean winding up your company, but if you've set it up, you've got your IP and your trademark, it can be sold back to you as an individual, or it can be sold, for $1 or whatever to another entity, and you can give it a go again. We've all got to the top or almost to the top, and something happens and it comes back down again. It's about having a very simple framework in place so that when it does roll back down the hill again, it's recoverable. You can protect yourself and you can be clever about how you resurrect your idea. Unfortunately, under these Frydenberg laws, there's no change to the bankruptcy rules. You, as a person, if you can't pay your debts, you can be declared bankrupt, and as I said earlier, you're left on the list forever. And I did have a conversation with a new backbencher in the federal parliament last night. They are thinking and looking at making some changes in that area because it is Dickensian, but that will take time, as everything does, and it's pretty low on the list. But not for you if you get caught up in it. There are two other models or frameworks that you could use. One is partnerships. That's where you get a group of sole traders together and they create a partnership agreement. Again, this is how much money you're going to bring in. Here are the responsibilities individual partners will have. And most importantly, here's how a partner can get out. They have to be paid back what they put in. They can take, if they brought in the IP, they take the IP. Very much, as I've said earlier, in all of these, make sure you've got an entry and an exit plan. We all get very excited when we go into a venture, but we forget about what happens at the other end. It's like a friendship, only there's money involved, and that changes the term of the friendship. Unfortunately, partnerships have control over who can come and go in the partnership, unlike shareholders who are bound by the share agreement, but it's much easier to trade in shares than it is for someone around the table to say, I really don't like that person, I don't want them as a member of their partnership, and I don't care that they're bringing in multi-million dollars. It is very much it's a family. You're also, in a partnership, you're liable for the actions of your other partners. If one of them goes off and enters into a loan agreement and uses their partnership takings as security, takings aren't there, all of the partnership is responsible. And like any family, it has its fights at times, and you have to all trust each other because you're not protected in the way you are as a shareholder in a company. You can't also issue shares or any other form of security to bring in investors. You can only come in as a partner. The last structure is a very old-fashioned one. It's been around since human beings trusted each other, and they actually sometimes make for very interesting reading, and you can see the history of the deal that was done. But a trustee company is set up and there's a trustee who sits outside of the company or whatever the venture is, and it's their responsibility to ensure that the terms of the trust are adhered by. If you're a beneficiary of the trust, you don't own the trust assets, they're owned by the trustee, and the trustee has the right to make the decision as to whether or not to sell the assets or buy new assets. You just sit back and enjoy the benefits of the actions of the trustee. So they're really not for businesses or individuals who want to get on with something, who want to develop, create, move quickly, because your trustee might want to sit and think about it for a while. There's a very famous novel, Bleak House, that I read as I was doing the last few months, it took months, of my law degree, and it was all about trustees in Victorian times, and it almost made me give up being a lawyer, but I decided I'd be positive and make sure it never happened again. So you've decided what you want to do. You gone and got advice from everybody, including a solicitor, and you want to set up a company or even set up a sole business. What the next important step is, within that legal framework, you set up what your aims and objectives are. We listened to Murray yesterday, and he was fabulous. It's the ship. It really is the ship that goes out, and you as the director or the owner have to guide it and pilot it. The ship, to a certain extent, is reliant on the climate around it, the business climate, literally if it is a ship, the weather. And Murray raised the issue of how do you make sure that that ship is being piloted properly? How do you make sure that the ship keeps going on its journey and reaches its end point, or is able to keep on sailing? So within the legal framework of what you pick up, again, you can set up the beginnings of it. All companies have a constitution. It's a legal document that sets out the powers of the directors, the powers of the shareholders, how it's to react with the community around it. And it's in that constitution that you set up the objectives of what you want that company to achieve. Make money. Simple as that. Or make money, but at the same time achieve a social outcome for the world that you live in. The profit that you make is going to go into a social enterprise or into some issue that you're passionate about and you want to see the world change, or just your community change as a result of the fabulous idea, the product that you've come up with. It's a very interesting conversation. You do it right at the beginning. What do I want to achieve as a company? And you put it in your objectives, and there it is. Your objectives are set out. That's what will guide you along the journey that you're going to go on. So, like earlier referred to B Corps, their objectives have to have a social basis. Some people call it mission, some people call it objectives. You should also make sure that you come back and really look at your constitution, that its objectives are what you want and your shareholders want the company to keep doing. That way, and also how the company is doing that. You know, are the directors, are they only there for 3 years and then they disappear? Or are they there for so long that they've forgotten that the world does change around them? It's in that fundamental first document that you set up the principles under which you're going to guide your ship. at Murray also raised the issue about, how do decisions get made? How do you ensure that your directors or your shareholders make decisions that are what the company or what your idea is all about? So when you establish your board, you look across the community that you want to serve, that you want to benefit. You bring in experienced people, old people, people who've done businesses a few times. You also bring in innovative people. You bring in your friends who you know will support the ideas that you have. You also realise that, again, that's a group of people who have to work together, who have to make decisions. Big part of being a director is that they actually are decision makers. And that the process for making those decisions is always in the best interests of the company and its objectives. You may have a director who comes in, or someone who wants to be a director, and they say, I could be a director and I can bring in all this capital to grow the business, but really I don't care too much about social enterprises. Look, that's fine. Do you want my money, or do you want me to take it somewhere else? The board has to make a decision about that, and that's where Murray's idea of really where are you going, where are you heading, how do you get there in the best way, that's hard. That's commercial reality versus, some would call it idealism. But you've really got to make sure that your shareholders and what they want in return in the parameters of your objectives. Directors also make strategic decisions about the organisation. They also need to be able to stand up to senior management in the organisation. Senior management have KPIs to meet. They have maybe, doing the work so they get their next job. Again, as the directors of the company, the objectives of the company, that's constantly needs to be at the forefront of what you're doing. You also have to follow through on the decisions that you make, and you have to be prepared to implement them down through the organisation or across the organisation, depending on what sort of setup you have. That can be done by having clear policies and procedures as to how to implement those policies. You don't need a 25-page policy on financial delegations. You don't need a 25-page policy on how you're all going to treat each other in the workplace, because nobody reads a 25-page document. Keep it succinct, keep it readable, and people will actually pick it up and have a look at it. And they'll go, oh, that's what's expected of me if I'm going to be a part of this organisation. Follow through on it from the top down. Board members, senior staff, junior staff, if you see things that aren't what your company is all about, pick people up. Say to them, this is not what we want. Compliment people when they actually do carry through on the sorts of things you want your company to do. It's not scientific. It's about people. It's about humans interacting with each other. And it's about having a base from which you and others can then implement the things you want to achieve. Do we have any questions? Sorry, this is all technology. So, good question, Linda. Yes, you can definitely change your business structure. You can start off as a sole trader and you can see that things are growing. You want to bring in investors. You go go and create the company, develop it, that entity, and then if you're the IP owner or if you're whatever you have, you would gift, sell, transfer over into the company's name. There may be tax implications depending on what it is you're transferring over into the company. It's more than doable. A lot of people will tell you, oh, it's all too hard, it's too much paperwork. It's not. It is paperwork. Pay someone to do it or just work your way through it. But it's about being mindful of where you want this all to go and just following it through. Jen. So that's a question that actually would come down to the detail of what you're actually doing. So should we quantify the minimum investment? Yes. All of those sorts of issues have to be worked through. A lot of them are more based around taxation and the ATO's requirements. A social enterprise, be a charity or a not-for-profit, it can't make a profit, but the commercial entity that gets set up, if one of its objectives is to support the social enterprise, then the money gets donated. But again, you have to get quite specific advice, but the social enterprise mustn't ever make a profit. So that's a balancing act of the books, the money that you're making. Jade, trademarks and IP. It's not my area of specialty, but yes, there definitely are. I'll get your email address and I will send them all through to you. There is an IP register in Australia. There's trademark register. There are international registers because, of course, these things do go across the world. And Vic, yes, the Constitution is a legal requirement because that's the document, that's the law, the rules around which you've got to operate, which the company operates. They're available on there's a number of companies that just turn them out. They're model rules that fit within Corporations Act's requirements. All of the standard stuff is already there. You do not need to go and draft an entire constitution. As I say, it's the part that you get involved in are the objectives, which is the passion, the mission, the purpose of what you're doing. Cooperatives. That's, as you might have guessed, I'm very much a pro-company person. Cooperatives are similar to partnerships. For partnerships and for cooperatives, there is legislation around how they are to conduct themselves, what their liabilities and what their responsibilities are. A cooperative the control in the cooperative sits in the co-op members, not in the directors and the shareholders. Very much it's the type of people that you're getting involved with, who you want to join together with. They're not so good if you want people to invest because they have to become a member of the cooperative. They might not want to be, or you might just want their money. You don't want them. Okay, if you're going to bring in capital through a public but unlisted. Lawrence, that will come down to the shareholders agreement that you enter into. And okay, and I'll definitely put up those IP. The issue around capital and public companies, it's all regulated now in Australia. My point of all of this is, at the beginning, set up a framework and understand how that framework works, what that framework enables you to do. That framework will protect you as the individual with the idea and the framework will protect those that invest in you and support you. And then after that, off you go. As you all know, companies work, businesses work, they also fail. You get people who are involved to rip you off, don't actually promise what they're going to do. Your idea, your product actually was just that, an idea. It was a startup product. Or you get what we've got now with coronavirus, which has happened before in the world. We've had plagues. We've had plagues here in Sydney. You know, the rats down at the Rocks and all that housing down there that was private housing was brought up by government in order to support people whose business disappeared because no one would come down there because they had rats with the plague. Coronavirus is just a vicissitude of the world that we live in. And I know I'm beating around the bush a bit, but coming back to it, your legal framework can be set up to protect you from whatever happens. It'll enable you to be, in Australia, fortunately, protected by regulation. It also has its downside given some of our old-fashioned regulations. It can also protect you from investors, if they're not really the sorts of investors that you want. It'll give you the confidence to have commercial conversations with people. It'll give you the confidence to know that you're making decisions that will protect you and will also keep you able to fulfill your obligations and get on with growing if you want to, or wind it up, move on and try the next thing. They also, the frameworks that I've given you, as I say, in this whole governance space, which is really, is very important because it's the lifeblood, it's the way you conduct yourself, it's your reputation in the business world, in the social world. It gives you a base from which to work and it gives you some control over that base. It's an interesting journey, flexible. There are gurus out there who will give you all sorts of wonderful ideas, but even the guru needs a base from which to start. I think as we just start to wind up, get advice. Don't be afraid to ask questions. This is something Murray said yesterday. There's no such thing as a silly question. Find a trusted advisor, a lawyer, an accountant, a marketer, and never be afraid to ask silly questions. Never be afraid to float an idea and get advice as to how to make it happen. Challenge the way things are done. The courts are full of people who challenge, and a lot of the time they win and they change the law. And that's very important, that you challenge and you bring about changes so that you can get on with what you want to do. A little bit to the aside, that the current decision by the Court of Appeal that says, as an owner of a lot in a strata unit, you can own a dog or a cat or a goldfish and have it inside your unit. The owner's corporation cannot blanketly tell you you can't have a pet. Two brave people took on a bunch of strata committee people, a bit like your board of directors, and they just pushed it through the process, and now the law has been changed and you'll be able to keep a snake in your apartment if you want to. That's about taking a basic framework, a basic set of ideas, and pushing it on, moving it on, but at the same time protecting what you've got and your IP. So go and get some advice. Come and see me. I'm allowed to promote myself. Here are my details, but I will send through some more information as to some of the existing registers and existing templates that exist to enable you to make some decisions and to put into place how you want to set yourself up and go off and produce the next fabulous thing to make our lives much more pleasurable. So thanks everybody and good luck with it all.